Hello friends, I'm Mohammed Fajam and I'm here with training courses on earning dollar income from global markets. So, we want to understand that now that the exchange rate has become so attractive in Iran and we want to earn income in dollars, it's necessary to get to know more about the markets from which we can earn dollar income. One of the markets you're familiar with is the cryptocurrency market. But the biggest markets in the world right now are the Forex market, the commodities market, and the energy market. What is Forex? The Forex market is the market of currency pairs. When two currencies are placed side by side, we can trade on the difference between them. What kind of market is the commodities market? It's a market where commodities are traded like global gold ounces, silver ounces, platinum, and the most precious gemstones and valuable ounces. Another market is the energy market. The oil market, gas, futures, WTIs, and energy market futures contracts are all part of it. Now you probably have some questions in your mind like how can we connect to these markets from inside Iran? What are the prerequisites for entering these markets? If we want to enter these markets and start trading, well, let's be honest. On the other side of the system, we're entering a market where the most powerful people in the world in terms of economics, the biggest investment and asset management companies are sitting and trading in this market. So how can we enter this market and make a profit alongside them? How can we make deposits? How can we make withdrawals? Isn't Iran under sanctions? With all these sanctions, what happens to our money? How can we withdraw our money? What tools do we need for deposits and withdrawals? What basic requirements do we need to enter these markets in the first place? At what age, with what knowledge, and with what qualifications can I follow these markets? Or more importantly, do I even need to know English? No, and many other questions, all of which we answer one by one in this course. First of all, I want to reassure you that we are designing this course in such a way that you don't need any prior knowledge at all. No matter your level of education or knowledge, we're going to go through every detail of this market together, step by step. The market consists of technical analysis, fundamental analysis, and all the tools you need to become a successful trader. And we're here with you to help you achieve that. So the first question that usually comes to mind is how we should make a deposit. The methods for making deposits through different ways are included in the package, and we'll discuss them in detail in the deposit section. Now let's get to know these markets a bit better. The Forex market is a currency exchange market. For example, what does that mean? For instance, the well-known currencies euro and dollar, euro to dollar. The first phrase you usually hear from a Forex trader when you talk to them is, what do you think about the euro-dollar analysis right now? It's one of the major or main currencies in the Forex market. In these markets, we start trading and profit from the exchange rate differences between currencies. I want to tell you about 10 of the most attractive advantages of this market. The first advantage I want to talk about, which many people have come to understand these days, is that in these markets, there's no such thing as a buy page and a sell page. What does that mean? It means that at any time, at any price, whenever you want, you can buy or sell any commodity or currency pair. Why don't we have a buy page and a sell page in these markets? Because these are international markets and traders from all over the world are trading in them. What happens is that the market liquidity is so high that it takes less than a microsecond for our order to be accepted for buying or selling by the broker. Another attractive advantage of this market is that it is a two-way market. There's no such thing as a crash, losing your capital, or only being able to gain from one direction in the market. This means that when we feel in a trade that global gold is experiencing a good rise, we can make some really good gains from its growth. And when it's dropping, we can still enter sell trades and profit from the market's decline. This idea of profiting from declines, just like during the recent coronavirus situation, when the world's major indices, or the oil market, which you must have heard about, dropped so sharply, as well as the Dow Jones, Nasdaq, Wall Street, and many other global indices that started to fall. A lot of people felt that the world economy was collapsing, that the second 10-year crisis in America had begun, and everything was destroyed, the world was ruined. But the Forex traders were over the moon, celebrating how these declines created the biggest profits for them, and they were confident that they could profit again when the market went up afterward. So I can explain the two-way nature of the market to you like this. If we enter a trade in a one-way market, and let's say markets go up 40% of the time, are in a range 20% of the time, and go down or correct 40% of the time, in a one-way market, we can only participate in 40% of the market. But in a two-way market, our trading opportunities are doubled. 2 times 40%, that's 80%. We can profit from both upward and downward movements in the market. All right, let's move on to the next advantage. What would you like the next advantage to be? I have good news for those who have only experienced markets that are local, like in Iran, which are open from 9 to 12 and couldn't follow the market during those hours because they were at work or for any other reason. Guys, global markets are open 24 hours a day. How are they open 24 hours a day? Because to put it simply, there are 3 superpower countries and each of them takes turns keeping the market open for the whole world every 8 hours. Let me make this a bit simpler for you. For example, at 1:30 a.m. on Monday, our time, the global markets open according to Tokyo time. 8 hours later, around 9:30, the London market opens, and 8 hours after London finishes its session, around 5:30 in the afternoon, the New York market comes in and keeps the market going until 1:30 in the morning. So these 3 8-hour periods create a 24-hour loop for us, so that at any time during these 24 hours, whenever we want, in any market and for any currency we're talking about and choosing, we can stay in the market and trade. Of course, I should also point out that in between these 3 main markets, there are markets like Sydney in Australia, the New Zealand market, the Delhi market, Mumbai, Dubai, all these markets in between. Basically, every 15 minutes, a market opens and another closes. I mentioned its 3 main bases so that you have a clear idea of how a market can operate 24 hours a day, whether a single country is supposed to keep it running or how several countries cooperate together so that this concept is easily understood in your mind. So these markets are 24-hour markets. So today we can decide, based on the strategy we set and depending on the commodity stock or currency pair we choose, at what time of day we want to sit down and trade. In the package section, in the part about market hours and trading hours, we'll talk in detail about overlaps or the simultaneous operation of these markets, and together we'll check the best trading times based on the stock, currency pair, or commodity you've chosen. Because when we want to start discussing fundamentals with you, we need to pay attention to this point. For example, if you've chosen the USD market, let's say you want to trade euro to dollar, when we said that at 1:30 a.m. Iran time, the New York market opens, it means that during this time, news related to the dollar is going to reach us. Those daily, weekly, and monthly reports and updates about various fundamental topics like unemployment, employment rates, interest rates, Federal Reserve speeches, and anything else, all of which will teach you thoroughly in different ways so you can fully master them. Those reports, conferences, and meetings are scheduled to happen during the US market hours. So anyone trading the dollar or any currency pair with the dollar on one side needs to be aware that from 5 p.m. to 1 a.m. US news is being released, and this can have various effects on the currency they're trading if the dollar is involved. All right, let's move on to the next advantage. Another attractive advantage of this market is trading leverage, or what's commonly referred to as leverage in trading. We know that when it comes to buying anything, whether it's a commodity, a stock, or whatever, it's always been the case for us that we can only buy as much as our money allows. Here, there's something called credit. Credit that the broker gives us. This credit provided by the broker allows us to enter larger trades with less money. Let me give you an example. For example, I have 100 million Tomans and I've definitely done my analysis. I'm analytically confident that property prices are going to increase by 80 to 90%. I've seen a property priced at 1 billion. Well, since my analysis shows that this property is going to increase in price by 20%, I want to buy it. But with my 100 million, I could never make this deal in the regular market. So what do? I use my leverage, and with the leverage I have, I enter the deal for that 1 billion property with my 100 million. When I see that the property has increased by 20% and is now worth 1,200 million, I sell it. The 200 million profit I made combined with my initial 100 million means I've achieved a 300% return. In this case, the 900 million that I didn't have was provided to me by my leverage, my credit, or my trading leverage, whatever we want to call it. So I was able to enter bigger trades even though I had less money and make a really good profit. So one of the major advantages of this market is leverage. Well, something you've definitely heard about or been told in the cryptocurrency markets is that leverage can go up to 125. In Forex markets, leverage can even go up to 1,000. But leverage is a double-edged sword. We need to know when, where, and how to use leverage. Because just as it can give us very attractive profits, it can also inflict significant losses on our account. In the topic of capital management and using leverage, we will thoroughly explain this double-edged sword together. We'll see what level of leverage is appropriate and to what extent we should use leverage. All of this is included in the capital management section of this package, so you can make good use of it. The next advantage is the countless trading opportunities. What does that mean? It means we never feel like we're falling behind the market. Whenever we come in, if we've missed an opportunity, arrived late to the market, we're waiting for it, or it has already passed, it's not a problem at all. There's a well-known saying in global financial markets that opportunities are like buses and we're standing at the station. If one bus leaves, the next one will arrive soon, so there's absolutely no rush here. It's not like with a domestic stock where we say, now this stock has grown by 500%. Oh no, something like this won't happen again for another 20 years. In the various time frames in which we can participate in the market, we can make profits from the market without worrying about missing 1, 2, or even 3 opportunities. With the patience we have for the market, even in lower time frames, we can always profit from the market. Why? Because the market is two-sided and there are plenty of trading opportunities. As I mentioned before, do you remember when I talked about the market's liquidity? The market is so liquid and economic news moves these charts up and down so much that reaching the next opportunity happens much faster for us. In local markets or domestic markets like the Iranian Stock Exchange, it takes a long time for a trend to form or for a correction to happen, so you have to wait quite a while for a new opportunity to arise. But in global markets, it's not like that at all. Every day we can have really good opportunities for trading. Another advantage of financial markets is the way you can customize your trades. What exactly does that mean? It means we don't have to only enter trades when we're sitting right at our computer and manually place an order to buy or sell from a specific point in the market. With the options available in this market, we can easily customize our trades. What does that mean? It means we can set certain price ranges that we've identified for ourselves, and since the market is open 24 hours and we don't want to sit at our computers all day, we can instruct the system to automatically buy for us with the risk management we specify when the price reaches a certain point, or to sell for us when it hits another price level. Enter a sell trade, not close my position. Here, selling means taking a sell position, which is the opposite of closing a trade. And what are some of its really attractive advantages? We can set a take profit, which is a profit target, or a stop loss, which is a loss limit. Because during these 24 hours, the charts are moving, and there might be a time, 4 hours, 5 hours, 4 in the morning, 5 in the morning, when we're asleep and our profit target is reached, and the market automatically takes the profit for us. Or maybe things are going against our analysis and the market is about to move contrary to our prediction. Whether it goes up or down, our stop loss prevents us from taking heavy losses. Because beforehand, with risk management, we haven't put more than a certain percentage of our capital at risk, and based on that, the stop loss is triggered, which prevents and protects our assets from bigger losses. One of the options that can be really attractive is the low cost we pay for each trade. What we call the spread, or the fee we pay to the broker for opening a trade, whether it's a buy or a sell, doesn't matter, is very minimal. Let me explain this a bit more for you. For example, let's say we want to make a one-lot trade. The unit for measuring trade volume in the market is called a lot. Each standard lot is 100,000 US dollars. Now, when we want to make a one-lot trade, by the way, let me point out that to trade one lot, we don't need to have $100,000. We'll discuss in the leverage section that we can even make a one-lot trade with just $200. It's even possible to trade one lot with just $100. Now let's say we want to make a one-lot trade. We enter the trade with 100,000 US dollars. Well, in your opinion, when you want to buy a property in Iran and you go to a real estate agency, how much commission do you have to pay for buying or selling a house worth 10 billion tomans? You have to pay at least 10 million tomans in commission? But here at most, it's around $3 or $4 for 100,000 US dollars. And even that is deducted from the profit we make from the market. So this low transaction cost is an advantage for us, allowing us to make more and better trades without worrying about the initial transaction fees. One thing that a lot of people ask is, okay, we've made a profit, we've traded, but how do we cash out our money? Let me explain this with an example from the domestic stock market. In our domestic stock market, when we want to cash out one of our shares that we've sold, they use the term T+2. T means the time factor plus 2, meaning it takes 2 business days, unless it falls on Thursday or Friday, for our money to be deposited into our account by the brokerage. But in the global market, when we say liquidity is high and everything moves faster and more powerfully, just as charts move more quickly and patterns form faster, when it comes to withdrawing from your account, all you need to do is press the withdrawal button, and at most within an hour or two, the money can be in your account at the current exchange rate, meaning the daily dollar rate, but converted to rials in your account. Now, someone might say, I don't want Rials, or for example, I want it through WebMoney, PayPal, Visa card, or any other method. It doesn't matter. And in fact, other methods that are directly connected to foreign accounts might even be faster. But someone else might say, I don't have a foreign account. I'm inside Iran. I gave Rials equivalent to dollars, and I want the Rial equivalent of the dollar at the current exchange rate. Through an exchange, the money is deposited into their Iranian account very quickly, within a maximum of 2 hours. One specific aspect of these global financial markets that I personally find to be very appealing is the fact that they allow me the freedom to trade from absolutely anywhere in the entire world. Every business, whether big or small, basically requires you to be in a specific location. For example, if I am a surgeon, I need to be present in a hospital or in my own office or clinic to perform surgeries. This means my income is limited to my location. And in order to earn a good income, I need to be present in that location more often. But in these markets, the competitive advantage compared to all the markets we've known so far is that we have the ability to trade from anywhere in the world. With just this one laptop and an internet connection, no matter where I am, whether I'm in Iran, traveling, or abroad, I can oversee my own business and make a profit from the market. So I don't need to consider these limitations. I don't have to deal with restrictions like having to travel back and forth to earn an income, or having to go to my company, or needing to be in a specific location to make money. Very easily, very simply, I can live an unlimited life that is without restrictions, even while traveling. A lot of people, when they go on a trip, have to shut down their business for a few days. When they're traveling, maybe their business is still running, it's operating, they've left employees in charge who are working. But the fact that they're not personally overseeing their business gives them a feeling that things aren't running the way they'd like. But this way, we can have our business and our own factory with us on a laptop, and wherever we are, in any country, at any time, with easy access to the internet, we can use the knowledge we've gained from this market to maintain our dollar income from the market. Another advantage of this market that I want to tell you about is its flexibility. What does flexibility mean? It means that this market can adapt itself to any kind of strategy so that you can make a profit. It means you don't have to stick to just one strategy in this market or insist that you must only work with a specific method. This market is very flexible. We can use the strategies included in the package for you, and with different trading methods, we can profit from this market. Someone might want to work with new wave patterns, another person might prefer to use price action methods, or someone else might want to trade like the Japanese using the Ichimoku trading system and so on. All the strategies we know and are going to work with one by one. We can easily continue working with our chosen method and make profits from the market. Another advantage of this market, which is a huge gateway to success, especially for those who are just starting out, is that you can have demo accounts or so-called practice accounts in this market. This means that before we put our real money into this market, we can load the same amount as a demo on the real market and trade with it, testing and experimenting with what we've learned. If over several months, 1 month, 2 months, 3 months, we're working with a demo account and, for example, we've loaded $1,000 and now we've reached $1,400 or $1,500. We've loaded $10,000 and we're up 30 or 40% in profit. We've made 10 or 15% profit per month. What does that mean? It means the strategy we're using, our method of working, is correct and yields positive returns. Once we've reached that peace of mind, only then should we put our real money into this market. Guys, this is very important. I really want to emphasize this. First and foremost, because this market is very exciting, only use a demo account at the beginning. With a demo account, we have a lot of freedom to try out any trial and error we want. We can test any strategy we want. We can figure out the best trading hours, which currency pair or commodity matches our personality, or besides all that, we can evaluate the outcome of our trades over a month and learn money management and everything else we need to learn, all in a demo account. Guys, the demo account operates in the real market, meaning it's the actual market. It's just our account that's different. Its profits and losses don't affect our real profits and losses. Otherwise, the amount we fund is real, the market we're trading in is real, and everything that happens in the market and all the orders we place are exactly what we would do with our real account. The only difference is that the account is a demo, and that's really nice. Let me give you an example. You've taken pilot training courses, become a pilot, gotten your certificate, you have a pilot's license. Now, for your first time, they don't just say, here are the passengers, here's the plane, go ahead and fly it. If you make a mistake, you don't crash with all those passengers on board. The first time they take you into a simulator room to practice. That flight is exactly like a real flight, but the difference is that it's a simulated cabin, so if anything happens, even if you crash there, no one gets hurt. A demo account in global markets works exactly the same way. There, you can test different leverages, you can try out your deposit amounts, capital management, various strategies, all of them. You can see your trading results over different months, and if you're profitable, then you're allowed to fund your real account. But if you still need more practice and support to apply some concepts more effectively in the market, then we'll stay in demo mode, keep working in the demo, and make sure our results turn positive there. Because let me tell you a little secret. The excitement of the real market with real money is so intense that sometimes mental errors creep in and you can't apply the knowledge you've learned properly. That is, unless you've practiced it thoroughly in demo mode beforehand. You should have worked with it really well in the demo. In our own slang, you should become a real pro at it. Then you top up your real account with a smaller amount, test out the excitement of trading with real money, and after that, you're supposed to reach dollar income over a significant period of time. Let me give you an example. A lot of people go to university, a lot of people study and get an education. To get a bachelor's degree, they spend 3 or 4 years at university, going through different semesters and passing various courses. But then you see that even with a bachelor's degree, the person still can't get into a business where they can earn a good income. Guys, we're about to enter the largest financial market in the world. Don't think that just by watching 4, 8, or 10 sessions of a package, something significant will happen for us and we'll be able to compete with the financial superpowers of the world. But I promise you, and I give you this good news and assurance, that in this course, we're going to move forward so beautifully, step by step, side by side, covering every detail so that the progress we see in ourselves each time will be such that in the end, we'll witness our own success in our demo accounts. This will give us the confidence and capital management skills we need to be able to enter our real account and profit from the market.